Hi everyone, well welcome to the channel, and it's of course getting to know BMO, and the man from the BMO is our mortgage specialist Assad Naeem. There he is, and we're talking today about new build mortgages. Assad, good to see you, buddy. And I know a lot of people, there's a lot of new builds getting sold at the moment, isn't there? Everywhere you go, they seem to be building in every direction in Calgary, but anyway, it's important, of course, when you're getting a new bill that you understand the process of the mortgage, and that's what you're going to explain to us now, buddy.
Yeah, new builds are very popular. If I'm not wrong, I believe there are more new builds being sold than resale properties right now. And, especially new home buyers, they feel more comfortable with new build homes because, hey, new buyer, new home, it's a perfect mix, right?
Mm-hmm.
Uh, but, there's a couple of things that people should know for a new build. It's not going to be ready tomorrow for you to move in or a month, or even a month later for you to move in, unless, of course, it's a quick possession or a spec home which is already built. New build homes take some time, anywhere between 6, 7, 8, 9 months, all the way to a year and a half, sometimes, depending on certain circumstances. So, how do you get into a home and how do you get qualified for a home? And what is the mortgage about? Because a lot of lenders just do that mortgage, which is good for 90 days, 120 days, or BMO's maximum 130 days.
Mm-hmm.
But your home isn't going to be ready within the timeline. You're going to need to get approved again, or you might have to do another mortgage appraisal or pre-approval or application or anything like that again. But how can you bypass that? How can you just get one mortgage which carries you from the day you sign the contract all the way to your closing and possession date? That right there is called a builder mortgage, and we use builder cap rates for that. Now, what a builder mortgage essentially is, it's more or less like your regular everyday mortgage application with a little twist to it. It's not good for just 90, 120, 130 days. These are mortgages which are going to be held for you for 12 months, 18 months, 24 months, 36 months. Now, those are the most common phrases, but they can also be for 4 years and 5 years as well, depending on what type of construction you're doing. But I haven't seen any construction in my experience which goes 4 or 5 years. Most of them are settled within the 36 month period. So for that, you get your mortgage application in, that builder cap mortgage, be it whatever, 12, 18, 24, 36 months, once you're approved for that time period. And what I tend to do is I tend to look at the builder and see what their past building time frames are, and I one up that. So if I know, let's just say, for example, a builder, Morrison Homes, takes 12 months to build a home, I do it for 18 months. Why? Because there's always a contingency plan.
Yeah.
You don't want to be sitting on the 11th month and 29th day and find out that you're not taking possession the next 2 days, and then your mortgage application or your mortgage approval will expire. So that's why I give them a little bit of a buffer to extend that. So, okay, you have that 18 months to have that more home completed, any other contingencies that you have with the builder fulfilled before you actually go in and move into that home. So that gives a peace of mind. Now, once you're approved, you're approved. There's no more income checks. There's no more background checks. There's no more credit bureau checks. One appraisal is done on the property based on specs and purchase agreements. And there's nothing else that's required after that. So no more getting new updated pay stubs, no more getting new letter of employments or bank statements or anything like that. Unless there are material changes. Now, material changes are, let's just say, the purchase price of the home change. You got into the mortgage agreement with your basic contract, and later on you went to the showroom and you did upgrades and you did spec changes, and now all of a sudden the price has changed. That's a material change. Or if you've had job A and all of a sudden you change to job B, which pays you less, or maybe even lost a job, that's a material change, right? Or your credit is okay, you're using your credit normally, your average credit card or line of credit balance is more or less the same, but you went in, you did all your furniture shopping, and you maxed out your credit cards. That's a material change. So we ask people not to do material changes. And when going into a builder to get your initial agreement, have them max out that agreement to the maximum price to allow for allowance for any upgrades that you're going to do, any spec changes that can be done, whether you're going to take them or not. Just so you incorporate that in your initial purchase contract. So when we do your mortgage based off of that, we do it at the maximum price. Now, okay, you're thinking, hey, I maxed out my purchase agreement, but now I'm paying a whole lot more for a home that maybe I don't want. That's perfectly fine. Just as long as you got approved at the maximum value, when you're firming your agreement or you're firming your contract with the builder, you can take out the things that you don't want or that you don't foresee yourself closing with. You're approved over here. You don't have to be advanced the entire 100%. You can be advanced 70%, 80%, 90% of whatever you are approved for. And as long as that advancement is less than what the maximum price is, that's not a material change. You know you're approved for that maximum ceiling, and you can go in and you can withdraw those upgrades that you don't foresee yourself getting, and then you can carry on with your contract for that. But you're approved for that maximum value, and there's no other price change that's going to happen above that ceiling price, which will change that builder locked in mortgage. So in a nutshell, that's exactly what builder rate mortgages are. That's what builder mortgages essentially are and how they work. But if you have any question, Stu's here, I'm here, we're happy to help you out.
Okay, well, that's good then. And we'll do another video on stage payments with mortgages for new builds, yeah? All right,
Absolutely,
buddy.
for sure.
So your information's coming up along with mine, and I'll talk to you this time next week.
Sounds good. Take care, Stu.
Thanks, Assad. Thank you for watching our video. We hope you enjoyed it. Please subscribe to be notified of new ones.